We're here on RealAgriculture.com with the beef market update with Ann Dunford at Gateway Livestock Exchange. Good morning, Ann.
Hello.
Okay, Ann, the end of last week, cattle on feed report came out for Alberta and Saskatchewan. What were some of the findings?
Well, the biggest change in month-over-month numbers was the on-feed as of September 1, down 8%. Not a huge surprise. We've seen on-feed numbers above a year ago all through until we got into the last couple of months. This is the biggest drop. So I know anybody trying to sell fat cattle today is saying, well, it doesn't feel like there's that many less cattle on feed, but this is more a projection of what's going ahead over the next couple of months. So big change there. The placement number was smaller in August, but again, more of the cattle are staying here. So I still think we're going to see that number change in September. I'll be very interested to watch the number in September. We should see placements up based on what we're seeing happen here in the last few weeks. Marketings were better in the month of August, again, as packers kind of got at it and got some of these cattle processed, but we're still backing up numbers because of lack of exports.
Any increase in the amount of fat cattle that are going south of the border?
Not really. What's going south right now is still predominantly the contracts that were made quite some time ago, the commitments that were made a while ago. There are a few more cash cattle making their way south, but again, compared to previous years, minute in the big picture. So it's something, and again, the strength in the dollar, every time it looks like we're going to get close to getting a better job done exporting a few cattle and getting some of the surplus out of here, then the dollar shoots up like what's happening today, for example. So it really takes away any of our opportunity, or any gravy that might have been there is gone.
There's been a lot of talk about bearish mood in the feed grains market as it relates to barley and, of course, corn. What about the Canadian dollar currency? What are some of the things producers are talking about there?
Yeah, it's, we've got these things going on where it looks like, some pretty big yields, bearish from a feed grain price perspective. So that's shooting into more interest and more cattle being placed on feed, as I suspect we've seen over the past month. More of those cattle staying here. And so there seems to be a lot of activity, but on the flip side, when you run the numbers in these cattle, especially with the way this dollar is heading, really, really tough to make anything work. So that's one of the issues right now, and I think that's one of the, maybe potential nails that we haven't really been watching as closely, or could just still jump up and bite us. So strength in the dollar impacting us all the way through this winter, even with the favorable or the bearish feed grain situation.
And south of the border, from a fat cattle marketing perspective, has anything changed there?
Well, their cattle on feed report comes out this Friday, so we can talk about that maybe in the next report. It does look like on-feed numbers will continue to drop. If you look at their chart for 2009, their on-feed numbers in the U.S. have been down clear through from January to September, so I don't think that number will be any different again. Placements, remember July was such a surprise. They'd placed a pile of cattle in July when, of course, the corn market was down. It'll be interesting to see what happens with their August placement pattern. It looks to me like placements have remained on a fairly normal pace. Packers have not been killing as many cattle. They've been trying to hold their kills back in the U.S. to try to keep the cutout propped a little bit, if you will, a little bit artificial, and as a result they're not getting through cattle maybe quite as quickly as we'd like to see them. But there's a little bit of a balance there between lots of fat cattle available, but you don't want to dump them on the market or have a whole bunch of beef on the market and crash this cutout value. So that's kind of what's going on in the U.S. right now.
There's obviously the dairy industry in the U.S. is really struggling. Has that impacted the kill numbers at all in terms of the cows?
When you look at U.S. cow kill, it looks like it's almost going to be a saw-off, and similar to what we saw in 2008. So we killed about 6.3 million cows in the U.S. in 2008. Looks like the number will be similar again here in 2009. But your point, Sean, is valid. It's been a kind of a saw-off between an increase in dairy cow slaughter because of some of these cow buyout programs that have been occurring. The U.S. is trying to get milk production levels back in line with demand given the current economic situation and global trade on milk. But on the flip side, they have had better conditions in a lot of the areas where the U.S. beef cow herd is, and so we've seen a decline in beef cow slaughter. So when the dust all settles, it looks like dairy cow slaughter could be up 300,000 head from last year, and beef cow slaughter could be down 300,000 head. So total, a saw-off, but most certainly a difference between dairy and beef.
In terms of the cattle that are being placed in feed yards right now, is there lockable situations for profit?
No, and again, it changes daily because of such big moves in the Canadian dollar, but today the storyline would be likely not. Now, we've seen feeder cattle prices dropping as this dollar moves higher, and don't kid yourself, it's a direct correlation. So as this dollar moves higher, feeder cattle prices are struggling to coming down as a result. The feed grain situation, like we talked at the front, is a little bit on the bearish side, but it is tough to go out today and lock in a profit, most certainly.
Okay, Ann, thank you very much.
You're very welcome.
For more information on Dunford or Gateway Livestock Exchange, go to gatewaylivestockexchange.com.